All right, thank you so much for staying with us. Now, the new tariff, that's Trump's tariff, will take effect, which has taken effect already from August 7th, formally places Nigeria amongst about 40 countries penalized for having what Washington considered an unbalanced trade relationship with the United States. President Trump had formally imposed a 14% tariff on Nigerian imports in April as part of his paid-off tariffs strikes expected to boost U.S. manufacturing and punish other countries for what he called years of unfair trade practices. The duties were suspended for 90 days and extended for another 1 month to allow for negotiations. Nigeria did not. Under the new structure, countries with which the U.S. has trade deficit will now face a default of 15% duty on all goods entering our American border, while nations with the United States trade surplus, by contrast, will pay a lower 10%. Mr. Gbolahan Olojede is a finance expert. He joins me to understand this better. Good afternoon, Mr. Olojede. It's really good to see you.
Good afternoon, Telo. Nice to be on the program.
Yeah, I think unfair trade practice, that's what Donald Trump is saying. I think we should start from there. Really, do you think this trade has been unfair to the United States, in your understanding?
Well, it has its basis, but certainly not when you consider Africa. The contribution of Africa to global trade used to be about 3%. I think it's below 2% currently. So we are not the problem. Our contribution to global trade is too tiny for any impact that might be a concern for the United States. However, when it comes to major businesses that the U.S. trade with, so maybe you're talking of Canada, or you're talking of Europe, maybe even Mexico or China, those are huge, trade. You can have trade balance issues with all those major partners. But as far as Africa is concerned, there's nothing. It's just like scratching your shoulder. There's nothing to bother Trump with. I don't believe that he's being cheated or that America is being cheated by any of those people. And this is not the first time in history when issues of tariff, are coming up. We've had them in some, in time past. The bad news is that for all the times that it came up, the results were not particularly exciting at the end of the day. Will it be different this time? It's left to be seen.
Nigeria's Minister of Trade and Investments said on an interview, she said, the trade relationship is mostly energy trading relationship. Now, she's citing efforts to strengthen other trade channels. Do you think we have alternative markets at this time, particularly at this time where we're even selling urea, fertilizer, and all of that from Dangote refinery to other African countries?
Well, thank you for mentioning Dangote refinery and the contribution to that export side of things. The truth is that we have other markets. Agreed, the U.S. market, because is a relatively prosperous market, is a huge consumption market. So you probably can get good prices and all that stuff from the U.S. But that is not to say there are no markets that we can consider. Starting from the African market in itself, the question is, how many African countries, for example, produce refined petroleum products? They don't produce, but they all consume. So apart from maybe Algeria, Angola, and a couple of others, there's nothing much coming out of Africa as far as petroleum product is concerned. So the question is, the petroleum product that they consume in the rest of Africa, where is it coming from? And why can't Nigeria be an alternative source to those countries for what they consume? And then we can spread our tentacles far beyond what is even possible in Africa. Though the first thing is that we have to have what to offer first. We are coming up in the refined petroleum product and petrochemical side of things, courtesy of Dangote. Maybe we can extend that to some other product that we can offer the world.
So the good news from the NEPC, I think over the weekend, that our non-oil exports jumped to about $3.2 billion, something around that for the first quarter, far about 19% higher than what we had in the same quarter in 2024. Is that showing us that we are heading somewhere?
Definitely, definitely. What we must now necessarily do is that we must break down the components of this export. So we identify where the numbers are coming from. This will help us to focus our efforts. More, and if you focus our effort, we can derive more value, because we now know, oh, this is where this increase is coming from. This is what is driving it. What kind of policies can we put in place to further trigger more action or more activities or growth in those key drivers? And once we do that, we will go even beyond the 19% that we're talking about right now. The opportunities are there and they are huge.
Interesting stuff. Urea fertilizer demand is getting higher in likes of Brazil, trading partner with China, Japan, UAE. So we're already looking at other markets where we could explore at this very time. But let's look at the AFCFTA now, that large market where we've been talking about it, and I'm sure we've had this discussion even before now. But my question really to you would be, are we taking real advantage of this? Nigeria, number one, are we ready to explore that market? You know, there were challenges with our manufacturers talking about being competitive, power, electricity, high energy costs, and all of that. How do we balance this up to make sure that we start to benefit from this large market? More than 1 billion people within this market, and the GDP is above $3 trillion the last I checked.
We're not quite there. And the reason is because we're not producing at the level at which we're supposed to produce. So we have a trade agreement before we started thinking of what to even offer in the first instance. So in the early stages of this, what we are likely to have is a situation in which other countries that are big in manufacturing will take advantage of the trade agreement. What would they do? They will bring SKUs, they will bring things that are partially manufactured and bring it to some countries in Africa where we'll do the final production, and then we can sell, within Africa. And a good part of that will still go back to the origin of the product in itself. So if a product is already 70% finished from, say, China, and then it is brought to a West African country where it is taken from 70 to 100, then you can offer it within the trade zone and make some money. But you still realize that the chunk of that, the benefits of that trade is still going back to that home country where the original thing came from. That right there will limit us in the early stages. But as we begin to ramp up and put policies in place, address the restrictions. For example, you mentioned power, which is a major issue in Nigeria, probably in most part of Africa, because Africa's problems are actually similar anyway. So if we begin to pay attention to those, and we don't just want to be doing commodities, but also looking at a value addition, then we'll begin to make better out of AFTA. For now, in these early years, it will be other countries that have better manufacturing capacity that will take advantage of AFTA by bringing partially produced items into countries in Africa for further distribution within Africa.
I'm worried, and that argument has come up so many times that Nigeria shouldn't become a dumping ground, and we won't allow that happen. I know our laws will try as much as possible not to make that happen. But do you think that there will be negotiations and renegotiations as we move on? President Donald Trump has been having a series of meetings. One has just been postponed. I think it was supposed to have with Vladimir Putin and all of that. Do you think all of this will have an impact? It's even hitting on oil prices and global markets.
Well, it will affect major markets. Hopefully, there could be an agreement could be reached. I know some of the agreements have been reached anyway.
Yeah.
I had something very successful in Europe. The China agreement is still being discussed. There are no finality to it as we speak. I don't think there will be much discussion in Africa because of the contribution is too tiny. Even of the 2% that we said Africa contributes to global trade, maybe South Africa alone is doing about 1% of it, and the rest of us are taking some 0.0 something all over the whole place. So I don't foresee that Trump will make any point of duty to want to have any negotiation in Africa, just because of the size that is involved. But then, as those, you see, while there might be some hurt in terms of the cost of doing business, even in America itself, and there might be slowdown in global trade by virtue of some of this tariff. One thing that is sure is that by the time the tariff agreements are all concluded, there will be a measure of stability. It will remove. There's been a lot of uncertainties around tariff for so long, for several months now. So as these agreements are being bedded and everything is settling, it will clear that uncertainty side of things. And that is very good for trade and for financial market generally. So that is going to be a win from all these negotiations that are going on. However, the real effect are things that we'll begin to see 6 months down the lane. How is it affecting inflation in the U.S.? How is it slowing down global trade? And all of that, we will have to wait it out.
All right, let's come back home now and look at profits that we've been seeing by some of our major companies now, particularly the bank, codenamed Fugas. That's talking about First Bank, UBA, GTB, now GTCO, Access, and Zenith. We noticed that there's been that, should I say, a positive shift from what we saw in 2024 compared to what we are seeing in H1 2025. Can you take us through what you've seen and what you make of this beautiful figures, I must say, that we are getting in?
Okay. I think it deserves our attention to see what has happened to corporate profits since 2023. In 2023, December, when you look at most of the performance of the listed companies, for example, it was very bad for the real sector. Of course, the financial services did well because probably all the money that the real sector lost, it was to their own gains in some way or the other. However, things have started to change. When you look at 2024 first half, and you compare the result of 2024 first half with the 2025 first half, you will observe that the losses that typified 2023 and the first half of 2024 appears to have changed direction. So if you compare Q1 2025 with Q1 2024, you see that a lot of companies that made losses in Q1 2024 made profit in Q1 2025. If you come to half year 2025 and you compare it to half year 2024, there is a significant increase in the profit after tax of listed companies in Nigeria in 2025 vis-a-vis 2024. So something is happening. There seems to be a recovery of corporate profits. And this is not unexpected because there seems to have been, those things that caused those massive losses in 2023 and early 2024, one of which was the exchange rate, has stabilized since the second half of 2024. So we are beginning to see corporate profits recover significantly. And we need to pay attention to this because it is not just enough that corporate profits should recover. It is more important that the benefit of that recovery will percolate down all the way to the bottom rung of the ladder so that the entire economy will begin to feel the impact of the recovery that is going on with the corporate profits.
Despite the fact that most of these banks are running the race of recapitalization, they are still doing pretty well. You talked about the stability in the foreign exchange market, and some analysts will also say that the bit of hike in that foreign exchange before we got to that stability is why many of them are also going on with so much profit.
Yeah, of course, the exchange rate, we Naira depreciated significantly.
Yeah.
There was no doubt about that. And that affected corporate profit massively as well. But when you talk of exchange rate, I always like to talk about it at two levels. One is the stability of the exchange rate, and then the second is the exchange rate itself. The stability of exchange rate is more important than the actual number of currency that they change, between one another. It's much more important. Stability first. When you achieve stability, and if you continue to do the right things, you will eventually achieve, the appreciation of your currency. Things are still very fragile. We must note that. But one thing is sure, for the past 12 months or more, the dollar to the naira has remained in that 1,500 and something neighborhood since that time. And that is some reasonable stability that the market can work with. It brings predictability and it helps the market to stabilize. And part of the fruit of that stability is what we are seeing in the recovery of corporate profit in 2025.
Moving forward, how sustainable do you think this will be? How will it be moving forward, considering what we expect? Economic issues, well, there's a bit of recovery. IMF has revised Nigeria's recovery figures, that's growth rate and all of that. Do you see more bullish trend, of course, at the stock market?
I think the stock market, part of what is going on in the stock market include the fact that there is recovery of corporate profit. Number two is that I think that market is also reacting to the depreciation of the naira. What do I mean by that? If a stock was 100 naira in 2023, when dollar was 500, now that the dollar is 1,500, shouldn't there be some adjustment for that? I don't know if you get what I'm saying. You cannot, if you are 100 naira when dollar was 500, how can you still be 100 naira when dollar is now 1,500? There has to be some element of adjustment, provided those organizations remain stable and fundamentally strong. If they remain stable and fundamentally strong, you cannot be 100 naira when dollar was 500 and still be 100 naira when dollar is now 1,500. So that is part of what the correction we are seeing. And then another fact that there is so much money in the system anyway, as the CBN is trying to cut on certain rates. The MPR has remained the same. There are certain fragilities around that. But when you look at the NTB rates, you see that the Nigerian Treasury bills that opened the year at about 23.4% or 23.84 is now at 16.5.
Yeah, in some cases 15.
So money would like to move from those instruments to other markets where it can make more profit. As simple as. So that's also part of what is going on that. So I think it's reasonably sustainable.
Interesting conversation as always. Mr. Gbolahan Olojede is a finance expert. Thank you so much for your time. I hope to see you again soon.
Yeah, thanks for having me.
All right then. Well, it's time to review trading activities on the floor of the exchange limited. That is time, and the market is still retaining its positive